Well, thanks very much. It's a pleasure to be back at the Australia Institute's Revenue Summit. Can I acknowledge the Ngunnawal people in whose lands we're meeting today? Dara Nuna, Dara Ngunnawal, Yungu, Nalamanyan, Dunimanyan, Ngunnawalwadi, Dowdawadi, Dindi, Wangaralin, Jinyin. I'd acknowledge too all First Nations people present and acknowledge the ongoing hurt that many First Nations people are still feeling in the wake of the result on October 14th. In the 1976 movie, All the President's Men, Washington Post reporter Bob Woodward meets his secret source, Deep Throat, in a dark underground car park. Woodward's investigating a break-in at the Democratic National Committee headquarters, the Watergate building in Washington, DC. It's a story that will ultimately lead to the resignation of Richard Nixon. Just follow the money, Deep Throat tells the journalist, before melting back into the shadows. It's a simple principle, but a sound one. Economists Ludwig Wehr and Gabriel Zucman followed the money all the way back to 1975 as they tracked the emergence of the global profit-shifting industry. Wehr and Zucman estimate that the corporate tax lost from global profit shifting into zero or low tax offshore tax havens rose from less than 0.1% of corporate tax revenues in the 1970s to 10% lost by 2019. As Gabriel Zucman notes, it's by following the money we can start to grasp the costs these territories impose on the economies of other countries. The challenge of collecting corporate tax has grown enormously. Part of that is because corporate taxes are simpler in an economy that makes physical products. Agriculture, mining, manufacturing all have clear locations of production. But when a company's output is digital, it's easier to artificially shift the location of production to the place with the lowest tax rate. Estimates of the amount of corporate tax revenue lost annually due to big multinationals minimising tax through low tax or no tax jurisdictions range from 500 to 600 billion US dollars annually. We've seen a race to the bottom in corporate tax rates, which has witnessed average corporate tax rates fall from 49% in 1985 to 24% today. Australia relies more heavily on corporate tax revenues relative to our OECD partners, despite the fact that, as my former office mate Michael Keating has noted, our reliance on taxes overall is lower than the OECD average. Since company taxes comprise nearly a fifth of Australia's revenue base, to just accept the accounting tricks and dodgy behaviour that multinational firms can engage in would have a massive impact on Australia. Multinational tax dodging means less resources available to fund our schools and hospitals. It means small businesses face unfair competition from large multinationals that are using tax dodges that just aren't available to smaller firms. The situation for local small business ends up like a team being forced to play against a headwind through the entire game. Among the shenanigans we've seen are shell companies created in low tax or no tax jurisdictions, allowing multinationals to funnel huge profits into secret jurisdictions where they have no employees and sometimes not even a physical office. We've seen one part of a company purporting to owe another part of the company a huge amount of debt, which then enables the shifting of profits by paying interest to the low tax jurisdiction and deducting those interest payments from the tax bill. That's tax avoidance 101 at work. One of the ways Australia's sought to tackle tax dodging is through the work of the Tax Avoidance Task Force, the Australian Tax Office. The Tax Avoidance Task Force ensures multinationals, large public and private businesses and associated individuals pay the right amount of tax in Australia. The task force scrutinises multinational tax dealings, often involving investigations that run over multiple years. The task force's impact has reduced the proliferation of profit shifting and transfer mispricing, and encouraged taxpayers to increase their taxable revenues in Australia. The Tax Avoidance Task Force has helped the Tax Office raise over $26 billion in additional tax liabilities. The accounting details might be complicated, but the principle is simple. All companies, large or small, should pay their fair share of tax. And that's what our changes to strengthen the thin capitalisation rules are addressing. The Albanese government's committed to ensuring multinationals making a profit in Australia pay their fair share of tax in Australia. Our multinational tax package is designed to close tax loopholes exploited by multinationals and improve tax transparency. Thin capitalisation changes are part of that commitment. On the 22nd of June this year, we introduced legislation to Parliament reforming the thin capitalisation rules, contained in the creatively named Treasury Laws Amendment Making Multinationals Pay Their Fair Share Integrity and Transparency Bill 2023. It's a tax integrity measure to raise tax revenues by an estimated $720 million over the 4 years to 2025-26. The changes target excess debt deductions, a known base erosion and profit shifting risk. It'll help level the playing field for Australian businesses, and it'll benefit all Australians. The thin cap changes are based on the OECD's best practice framework, which applies an earnings-based approach to interest deductions. By directly linking an entity's debt deductions to its economic activity and taxable income in Australia, the outcome is that those entities operating in Australia and using Australia's economic infrastructure pay more tax here. Stakeholder submissions to the recent Senate committee were clear that there's support for this intent. But the changes are highly complex, and as a tax integrity measure, there's sensitivities and questions of interpretation. We're attuned to balancing this tax integrity work with neutrality and equity considerations, and other broader macroeconomic considerations, such as stimulating investment. And that's why the government's currently working to progress sensible amendments to the bill, informed by the ongoing consultation with stakeholders, to balance the tax integrity policy intent while continuing to support genuine commercial activity and being mindful of compliance costs. The government also sees tax transparency as a critical part of the social contract that multinationals have with the communities in which they operate. The government's focus is to invite a behavioural change by multinationals and large corporates about how they view their tax obligations, including decision-making around tax planning strategies. Better public scrutiny on tax information will help provide the community with a better understanding as to how much tax multinationals pay relative to their activities. Sunlight is the best disinfectant. Just as the Gillard government passed laws requiring the Tax Office to annually report the tax payable by our largest firms, the Albanese government is moving to improve tax transparency. The bill introduced into Parliament on the 22nd of June is the first step in the government's tax transparency package. It requires Australian public companies to disclose information about their subsidiaries and be upfront with the public about how they're structured, including for tax purposes. It's about holding companies to account on their corporate structures and whether they're operating with opaque tax arrangements. This measure, once passed, will apply to annual financial reports prepared for financial years starting on or after the 1st of July 2023. From that date, investors, customers and the public at large will know if public companies are using tricky tax structures. Separately, from the 1st of July 2023, tenderers supplying to the government are now required to disclose their tax residency status and, if they're a subsidiary, the tax domicile of their parent. That'll apply to all large tenderers. While those two measures have flown perhaps under the radar, they're no less important to the behavioural shift that we're seeking on improved transparency. One measure that hasn't flown under the radar is public country-by-country reporting, which will see Australia put in place a world-leading set of disclosure laws. Public country-by-country reporting will hold large multinationals to account when it comes to their tax affairs. It puts the onus on multinationals to be upfront about where they pay tax. The government set the application date of public country-by-country reporting to the 1st of July 2024 to align it with the European Union public country-by-country reporting regime, which starts in June 2024. The government's consulted on exposure draft legislation in April and received broad feedback from industry, including internationally. In June this year, the government signalled we'll take some additional time to reflect on that feedback, including on the appropriate level of disaggregated reporting, to ensure meaningful improvements in transparency are balanced with appropriate compliance requirements on industry. When you're among the world leaders with a reform, it's important to get it right. Many nations around the world are looking to Australia's country-by-country reporting regime as they consider improvements in their own tax transparency regimes. Now, reforming the international tax system is no easy matter, but there's great global momentum towards ensuring firms pay their fair share. It's built on the OECD G20's two-pillar solution. Pillar 1 is the allocation of taxing rights to market jurisdictions. Pillar 2 is the global minimum tax of 15%. That landmark deal was agreed in 2021 by 136 countries, representing more than 90% of global GDP. In this year's budget, Australia announced we'll join a group of first movers to implement the global minimum tax and the domestic minimum tax of 15% from 2024. The global minimum tax will ensure large multinationals pay a minimum level of tax on income arising in each jurisdiction where they operate. That'll prevent the so-called race to the bottom on corporate tax rates and level the playing field between large multinationals and Australian local businesses. It'll reduce the tax differential between Australia and low-tax countries to help protect Australia's corporate tax base by reducing the incentive to shift profits abroad and make Australia a more attractive place to invest and boost economic growth. Our implementation of the global corporate minimum tax will allow us to apply top-up tax on large multinational groups operating in Australia, where the overseas income is taxed below 15%. And under the domestic minimum tax, it'll give us additional taxing rights on the low-taxed Australian income of large multinational groups. With over 50 jurisdictions taking the first steps to reform, it's important our domestic minimum tax regime is in place to prevent others claiming taxing rights on under-taxed Australian profits under their own global minimum tax regime. To that end, we're committed to strengthening the interest limitation rules for multinationals and expanding multinationals' disclosure of tax information to ensure the public is better informed about multinationals' tax arrangements. This is about the social contract that multinationals hold with the communities they serve. For too long, the global tax haven industry has gotten away with ripping off the citizens of other countries. This is tax dodging on a colossal scale, and it's been going on for decades. It's only by cooperating with other like-minded countries, by implementing transparency measures and committing to reform, that we can bring the international tax system into the 21st century. Because, as Washington Post reporters Bob Woodward and Carl Bernstein were told when they were investigating the Watergate scandal all those decades ago, it pays when you follow the money. Thanks very much.
Thanks for watching, and a very special thank you to all our supporters who help keep us running. We're not funded by political parties or fossil fuel companies or government, but by people like you who know the importance of evidence-based research in shaping the critical decisions facing Australia. If you'd like to support us to continue exposing inconvenient truths, challenging vested interests, and explaining the big issues in plain English, please consider making a tax-deductible contribution today. Visit our website australiainstitute.org.au to find out more.